today we'll continue with your double tax agreement. In the previous class, we have looked at the tax relief method. Alright, there are three. One is the tax exemption. We also have tax credit and tax deduction. Alright, today we go into another topic, subtopics under the same. Here where we have we are going to look into the withholding tax a bit. Alright, we have covered this topic, but it is that how are we going to apply your withholding tax when you have double tax agreement, right? So before that, it says that how are we going to seek treaty protection? So when we talk about tax, normally we call it as a treaty protection, yeah. So the governing principle of a treaty is to avoid the possibility of double tax on the same income. Right? In the treaty agreement, there contain various articles. So you see, remember that we have a lot of agreement with other countries. So one country, we have one agreement. So the double tax agreement between Malaysia and Singapore, for example, right, is one document. Malaysia and Indonesia is another document. But the content is almost similar, but of course there are a bit of differences, alright, depending on agreement between the two countries. Yeah? Alright, so in the treaty agreement there consists various articles define the scope of treaty, which include the person and entities to which it applies, the taxes covered, and the territories to which the treaty extends. So it's very clear, alright, whether you will be fall under that treaty or not, right? Whether you are eligible to apply the treaty or the protection given under the treaty means that the agreement, the double tax agreement. The coverage of each treaty should be understood before one embarks on any transaction with the treaty country. In order to have the maximum benefit from the double tax agreement, the understanding of the following concepts are very crucial. So the first one is that we get to the residence, right? In your tax one, you are already actually looking at the resident status of a person, right? But here, residents, some countries subscribe to the principle that a resident will be subject to tax on worldwide income, right? For example, the United States of America, right? The USA, the income is on a worldwide basis. So it means that their resident, wherever the income is derived, will be taxed by the US country, right? So US citizen, or in this case, we are talking about when you talk about tax, alright, it's not based on citizenship, right? It's based on resident status. If you are a US resident, then wherever income is derived will be taxed in the US. And at the same time, alright, assuming that the resident, the person is also a Malaysian resident. Alright, so remember that for you are in the US, right, and you stay in Malaysia for 182 days, you are a resident in Malaysia. But based on the US, alright, you may have a different law on resident status. So in this case, you have dual resident. You are a Malaysian resident, at the same time you are also a US resident. So US resident kata income is a worldwide scope. So whatever income is derived, the person has to pay tax to US. At the same time, in Malaysia, if you're talking about income which is derived in Malaysia, has to be paid in Malaysia, whether you are a resident or not. Yeah, it's based on derivation. Income derived in Malaysia. So how do you know whether income is derived in Malaysia or not? Then you have to go back. Employment income, what is the derivation? Alright, dividend income, what is the derivation? Interest income, what would be the derivation of the income? Yeah? Alright. So it could be that a person could have dual residence, right? Then you have to see whether what is his entitlement under double tax agreement. Withholding tax, where developing countries have DTA with developed countries, benefit can be derived where the DTA provides for a reduced rate of withholding tax or even tax exemption. So remember that when we had a topic on withholding tax previously, we said that okay, the royalty tax is 10%, right? But if there is a double tax agreement between the two countries, they may agree on that, alright, royalty payment will be taxed at 8%. or 5%. So normally, the double tax agreement will give a lower tax rate. Right? It cannot be more than 10%. Cannot. Double tax agreement will not have that kind of arrangement. It's either the same or lower. Yeah? And then we also have permanent establishment, which is very important part of the double tax agreement, right? So we are talking about permanent establishment, while our interest is more on business income. Yeah, business income, not royalty, not interest, not employment income. It's a business income. So in the business income article of most double tax agreement, PE, which is the permanent establishment, right, is a factor to consider to determine which country will have the authority to impose tax on a particular business activity. So you have to look at the permanent establishment. It's normal that a contracting state will only impose tax on business income if it is attributable to a PE. So when you have a permanent establishment, we call it as that you have a business in Malaysia or you have trading in Malaysia. So when I say that you have trade in Malaysia, means that you have a PE in Malaysia. So most likely you have to pay tax in Malaysia. Even though you may not have a resident in Malaysia, you are not citizen of Malaysia. If no PE, right, the income derived by a company in the other state will not be taxed by the other state. So for example, you have an Australian company having a business in Malaysia, right? Trading in Malaysia, that means that they have to pay tax in Malaysia. But if they only have trading with Malaysia, it means that they don't have permanent establishment in Malaysia. So in that case, they don't have to pay tax in Malaysia, even though they do actually have business income in Malaysia. Does that make sense? Right? Trading in and trading with. We also have the elimination of double tax. One should be aware of the provision for the granting of credit for underlying tax or credit for tax sparing. Sometimes they may impose conditions such as beneficial ownership or shareholding in order for you to get the examination or the elimination of double taxation. Profit extraction. So this one is only for you to understand the terms under double tax agreement. So when I say profit extraction, remember that you are talking about you are having cross-border activities. We say cross-border means that you are not in your own country, right? You are having business or activities outside Malaysia, or you may are talking about the other countries have business or activities in Malaysia. But talking about profit extraction, your royalties, interest and dividend are usually accorded reduced rates in most of the DTA signed between Malaysia and the treaty countries. It is therefore important for the company to decide what form of transaction or business present it should have in those countries in order to maximize profit extraction with minimum tax costs. So what it means is that whenever you have business outside Malaysia, of course at the end of the day you want to bring back the money to Malaysia. You want to extract whatever profit that you have, bring back to Malaysia, right? So whenever you want to invest in a country, you have to look at, is there a DTA between Malaysia and the other countries? And how would be tax be, how would be the profit or income tax under double tax agreement, right? So you want to look at those double tax agreement that give you the highest profit. So that the one you can bring back. So the cost to bring back the money is lowest, right? And this cost normally we call it as a tax cost. Other costs too you have to refer to others. But we are talking here about tax cost. How much tax will be imposed before you can bring back the money? Once you bring back the money, will you be taxed on the same income in Malaysia? Right? We are talking about this if you are talking about normal businesses, or foreign source income is exempted. But you're talking about visa, right? They bring back the money to Malaysia, it will be taxed because it's based on the world scope. Wherever income derived is taxed in Malaysia. Articles on non-discrimination and mutual agreement is to ensure that national, resident or citizen of one of the contracting states. So when talk about contracting states, we are talking about we are talking about the double tax agreement between Malaysia and Indonesia. So the contracting states are Malaysia and Indonesia. Yeah, is given the same treatment as a national of the other country when the derived income from or is taxed in the latter. So that's why double tax agreement, we look into both laws, tax laws between Malaysia and Indonesia, for example. How is the tax in Indonesia? How is tax in Malaysia? So when you have double tax agreement, you have to make sure that it's almost the same or lower. Cannot be higher, right? To be fair. Mutual agreement articles stipulate that if a taxpayer is not satisfied with the actions of the one contracting state, he can, as a last resort, appeal to the contracting state of which he is a resident. The two administrations are supposed to consult each other with a view to resolve the issue should there be. So, for example, if you have a business in Indonesia and you think that you are not being treated fairly by the Indonesian government, alright, you will get to tax. Because double tax agreement talking about tax, yeah, not about the other business activity. Kita kata tax on dia. So in that case, you can liaise with Malaysian counterpart, and then these two administrators will talk to each other regard to your issue. Yeah. So that's why it's very important for you to be aware of the agreement between the two countries. Overspill problem. Malaysia generally tax income based on the territorial scope. So what do you mean by territorial scope? So means that, remember that Malaysia punya map tu, alright, and then we have this East Malaysia. Territorial means that we only tax you whenever income is in Malaysian territory. Right, territorial. Kalau world scope, wherever derived. Alright, okay. So Malaysia based on territorial. The tax relief is only given in respect of the portion of income which is remitted back and which is then subject to tax in Malaysia. So it means, again, we are referring to visa, because other than visa, foreign income is exempted. Any surplus of credit for foreign tax over Malaysian tax payable will be a permanent loss. So assuming you pay a lot in the other country and suddenly in Malaysia you get tax credit. Right, so whatever you paid more to the other country, you cannot claim from Malaysia lah. Right, it's a permanent loss. Only applies to resident individual. Only resident company involved in the business of banking, insurance, shipping and air transport will continue to rely on bilateral relief to mitigate the Malaysian income tax payable. As these companies are on world scope basis, Malaysian tax will be levied when foreign business income accrued overseas. Bilateral relief will then be accorded. Right? Bilateral means that if you have double tax agreement between Malaysia and the other countries, then you're going to refer that as a bilateral. But if there is no tax agreement, you are going to refer to unilateral. Residence, most article indicate the provision on the residence. Double tax treaty because it determines the person who can claim the benefit of the treaty income allocation in accordance to the residence of the taxpayer and reduce withholding tax only available to resident, right, of the other contracting country. Example here, tak nampak. That hard, is it there? Do there? That hard, that hard. Nama that hard. A Malaysian resident company, right, is required to pay interest amount of 20,000 to Ito Japan Limited, a Japan resident. So payment of what? Payment of interest and most likely that the withholding tax. Yeah, because why? Payment to a non-resident person and the income is the form of interest here. The withholding tax rate in normal circumstances is 15%. However, Article 11 of DTA between Malaysia and Japan allows reduced rate of 10% and therefore will be applied to the Japan resident. So because you have the double tax agreement, you don't apply the 15% rate lah. You only withhold 10%. So it's good to the resident lah, because the non-resident person will receive more because of the double tax agreement. but not put to Malaysia lah, because Malaysia can only collect 10% instead of 50%. Generally, determination of resident status, whether a person is resident or not, is determined by domestic law of the country. So talking about Malaysia, refer to Income Tax Act lah. Indonesia refer to their tax law, how to determine the resident status. However, in view that the resident tax imposed by each country domestic law is different, it is possible for a person to be a resident of more than one country. Alright, the danger of dual or even triple resident status, resident may result in double taxation, so the DTA would set out rules to eliminate dual residence through the application of preferential tax. So if you have a dual resident, then you have to go, because if dual residence, you may end up to pay double tax. Right, so in order for do that, alright, in order to reduce or to minimize the exposure to double tax, so you have to choose one. So that's why they can buat preferential tax. Right, you want to be which resident. When an individual is a resident of both treaty country, will be deemed to be resident of only one, depending on what preferential tax. Where is your permanent home? Right, which is your central or vital interest, your habitual abode. Where do you normally stay? You may have permanent home dekat Australia, but most of the time you stay in Malaysia. Right? And then your nationality and mutual agreement. For a company that have a dual resident, the company will be resident in one of them based on the effective management, where is the place where the company is actually managed. In practice, RFB may regard the place of effective management as being the place where the day-to-day management of company is carried on, and may not be the place of important business decisions of the company are taken. So remember that under normal tax law, Section 7 or Section 8 of the Income Tax Act, for companies, the resident status is based on the management and control. So how do you see the management and control? Where the main decision is made. Right, your business decision, and then it has to be in, for example, for you to be Malaysian resident, company, the management control must be in Malaysia. But for this purpose, alright, it's not based on that, it's based on the effective management, where you actually conduct the business. Right, so that's a bit different lah. So kalau you tengok Income Tax Act, you're looking at the management and control, but looking at double tax agreement is the effective management is being exercised. Right? For UK, for example, in UK, the resident is placed where effective management, but for Japan, place of head office or management. So you have to look at in Japan, where is the head office? Kalau head office is in Japan, then Japan resident. But head office in Malaysia, then will be Malaysia resident. So it depends on the double tax agreement. Alright, John Thornton, an employee of New Zone Limited from New Zealand, has been seconded to Malaysia on 1st January 2021 for a duration of 1.5 years. 1.5 year maknanya 365 plus. Okay, benar. He was informed that the Malaysia authority treated his wife as a resident in Malaysia throughout his period of stay, although she has been treated for double tax purpose as a resident only in New Zealand. Explain how this can come about. Remember that different countries have different tax rules to determine the resident status. It depends on domestic law. So consequently, an individual can be found to be resident in Malaysia under Malaysian tax rule and also resident in New Zealand, for example, under New Zealand tax rule. This is known as dual resident. Most double tax agreements do not allow dual resident and contain a set of tiebreakers, rule to determine which of the two countries concerned will take precedence. In this way, the individual will be treated as resident in one country but not both at the same time for the purpose of double tax agreement. Yeah? This is possible because double tax agreement override domestic law where there is a conflict. I mentioned last time, domestic law is the domestic, right, DTA at the international level. So whenever there's a dispute, you have to refer to double tax agreement. Allocation of dual resident apply only for the purpose of double tax. Thus, the lady concerned could still be treated as resident in Malaysia for purpose which had nothing to do with double taxation. Alright, for example, personal relief, you boleh claim lagi lah, still can claim your relief because you are a resident. Alright, so this is now we go into permanent establishment. You see that the permanent establishment, the discussion is very long. Alamak, nampak tak? Alright. Responsibility of lowering tax. Okay. So PE. So remember just now I mentioned about PE means that if you have business or you trade in Malaysia. Right? Permanent establishment in a cross-border transaction, the central issue is which of the country has the right to tax on the gain or profit earned therefrom. In double tax agreement between Malaysia and treaty countries, the PE concept is employed to resolve the issue. When a foreign enterprise is carrying on the business, so talking about PE is always talking about business income. Have a business in Malaysia where profit are earned, profit will be taxed in Malaysia. So apa dia ada business through a PE in Malaysia. Leaving the country of the foreign enterprise to grant relief on double taxation. On the other hand, where the foreign enterprise does not establish PE in Malaysia, the business profit may be exempted from tax. However, withholding tax issue should be considered in institution where PE is not present. So when you don't have PE in Malaysia, but then you are a non-resident person and the payment fall under withholding tax. So you're talking about income, royalty, interest, contract payment, or the entertainer, all these things, withholding tax still applicable. Right, but in business, you are referred to the permanent establishment. Alright, how do you know whether you have a PE or not? Alright, normally refer to connotes a place of business established with the determination of carrying on business through that place. In the Malaysian treaty, the term PE means a fixed place of business in which the business is wholly or partly carried on. It also includes a place of management, a branch, an office, a factory, a workshop, a mine, oil or gas well, quarry or any other place of extraction of natural resources including timber or forest produce, a building site or construction, installation or assembly project which exists for more than 6 months. It should be noted that the 6-month time frame does not apply to all DTA. For example, Malaysia Singapore does not stipulate a time frame. So bila tak ada time frame means that katalah you construction, you ada you have in this case for construction or building site, you have normally dipanggil apa tu yang box tu container, and that container is actually an office. Have you been into a container office container? The construction site actually is very nice also inside that, right? Provided that the entity keep clear. Right, so ada aircon, everything. So if that container is used as an office and for construction purpose in Malaysia, the PE says that 6 months. But Singapore kata no, there's no. As long as you have a container or you have a kind of construction site, automatic you have a business in Singapore. Australia said 3 months, but Malaysia 6 months, right? So most likely, if you say that okay, I don't want to have a PE in Malaysia, make sure that less than 6 months, cabut, right? So you don't have to pay tax in Malaysia lah. So that's the strategy, right? Because if you don't want to pay tax, depends lah, right? If you think that okay, Malaysia tax rate is 24%, the other country 20% only, of course you don't want to pay tax in Malaysia. You rather pay tax in the other contracting parties, yeah. But if the Malaysian tax is lower, then you may want to have a PE in Malaysia. Alright, talking about, for example, Malaysia is having a business overseas. Right now we're talking about, last time it was Maldives. Right, satu lagi Maldives, satu lagi apa nama negara tu? M juga. Mauritius. Right, so Maldives last time, right, we call it as a country that offers lower tax rate. Right, or zero tax rate, kita panggil as tax haven country. Have you heard of that? Tax haven? So when you have tax haven, it means that you don't have to pay tax a lot in that country. And they give a lot of tax incentive lah. Why they do that? Because they want to attract foreign direct investment lah, FDI. Right? So, but Malaysia, we cannot give a lower tax rate, but we give a lot of incentive. So later tax 2 kan kita buat pioneer status lah, all this ITA, everything, all this. But again, for this incentive, you have to be a resident company. Yeah, whether you like it or not, resident company means that management and control is in Malaysia. So most likely you have a PE in Malaysia. Yeah, so if you have PE in Malaysia, then you can enjoy a lot of incentive lah. But you have to pay tax to Malaysia. Yeah. So a mine, oil and gas well, for example, Petronas, for example, they have dia punya quarry, not quarry, tak punya quarry, punya apa? Place of extraction. It may not be in Malaysia, right? But for example, if other countries, katalah Indonesia, right, they are looking for oil and gas punya resources tu, and happen that their place of extraction to happen to be within Malaysian territory, right? Then it could be that they have PE in Malaysia. Yeah. So a farm and a plantation. One needs to examine the article on the PE of the relevant country, as there are some variations among countries. It's very crucial to establish whether a foreign entity has a PE in Malaysia, as it would set up the momentum of tax system in Malaysia. So we say that what is the importance of having a PE in Malaysia, then you have to elaborate lah, right? Because once you have PE, it means that you have to pay tax in Malaysia. If PE exists, then the income attributable to the PE would be subject to Malaysian income tax, where an enterprise having one or more of the above fixed places is said to be trading in Malaysia. Right? Sometimes that's why some companies don't want to open up an office in Malaysia, because they don't want to have PE in Malaysia. Right? Alright, additional definition of PE, you have to look into that lah. Right, for example here, Article 5, Para 4, Malaysia, UK, DTA, an enterprise of contracting state shall be deemed to have a PE in the other contracting state if it carries on supervisory activities. You don't have to have an office, but you provide supervision. Right, supervisory activities in the other state for more than 6 months. So in this case, Malaysia and UK ada benda ni lah. Yeah. In connection with a construction, installation or assembly project which is being undertaken in that other contracting state, it also provides in Malaysia, Japan, 1999 DTA. So when you want to invest or when you want to put your business in other countries, these are the things that you have to look into, right? Because if you are not aware of the double tax agreement, alright, where you have to pay tax in the other country and you don't pay, right? You'll be penalized by the other country because you are not actually following the laws of the other country. Agency contractual relationship. So number agency, alright, when you have an agent. So when you have agent, alright, sometimes company, because they don't want to have a PE in Malaysia, so they don't want to open up an office in Malaysia. So what they do is that they appoint agent. Alright, agent whether in Malaysia or other countries. So when you have agent, or what called agency, right? Foreign enterprise that use independent agent, broker, general commission agent to market their products in Malaysia will not give rise to the establishment of PE. So kalau you ada agent, tak ada PE. However, alright, so bila you tak ada PE, you don't have to pay tax lah, right? Because they are merely trading with Malaysia. Tak nampak. Disneyland is a manufacturing company in New York, US. It manufactures Mickey Cat T-shirt. Cost of T-shirt RM30, while selling price in US is RM45. Both are translated from USD. In 2021, the company sold 500 Mickey Cat T-shirt to Ahquai, an independent agent in Malaysia, for RM35 per T-shirt. The gross income 17,500 would not have any Malaysian income tax exposure because Disneyland does not have a PE in Malaysia. So what happened is that, alright, now the company Disneyland have a business with a Malaysian Ahquai. Alright, so the business here, because Ahquai is just an agent in Malaysia. So when you sell to Ahquai, alright, Disneyland don't have to pay tax in Malaysia. Because why? Disneyland does not have any permanent establishment in Malaysia. Because why? The business is only to Ahquai, jual pada Ahquai only. No office, nothing, right? However, in the event that a dependent agent, so Akwai tadi is an independent agent, but if the agent is an dependent agent, it makes a difference, right? Dependent agent is appointed by foreign enterprise to market their product in Malaysia. Such appointment of agent may establish a PE, right? If any of the following activities present. If the agent, alright, has and habitually exercise in that first mentioned contracting state an authority to conclude contract in the name of the enterprise unless activity are limited to the purchase of goods or merchandise for the enterprise. So what do you mean by conclude a contract? Means that kalau agent tu dia boleh, katalah someone wants to purchase the t-shirt, right, from Disneyland, dia boleh ambil order tu, dia boleh conclude the contract. Nak simply ambil order tau. Means that there's a purchase agreement lah. There's a buying and selling there. Alright, so if you can conclude a contract, the agent now become dependent agent. So bila agent can conclude a contract, then it means that you have a permanent establishment in Malaysia. So it means that bila you ada PE in Malaysia, means that the Disneyland tadi, you have to pay tax in Malaysia lah. Because you have business through a dependent agent. He maintained in that first mentioned contracting a stock of goods or merchandise belonging to the enterprise from which he regularly fills orders or deliver goods and merchandise on behalf of the enterprise. So not only that, for example, if for example, katalah agent tu you cannot conclude a contract, but at the same time the agent actually holds stock for the Disneyland in Malaysia, right? So maybe the contract is agreed by Disneyland, between Disneyland and customer in Malaysia, but customer stock everything is in Malaysia by this Akwai, example, right? So then Akwai has a permanent, Disneyland has a permanent establishment in Malaysia through Akwai. Okay. In so acting, he manufacture. Kalau dalam manufacturing lagi lah, right? Definitely you have PE in Malaysia. So the manufacturing of the t-shirt is not in US, manufacture is in Malaysia by Akwai, for example. Ada agent that actually manufacture in Malaysia, definitely lah ada permanent establishment in Malaysia. Right, in summary, the above activity have to be continued activity or active conduct of business in Malaysia in order to constitute PE in Malaysia. Right, so what if do not constitute a PE? Right, the use of facility solely for the purpose of storage or display of goods or merchandise. Maintenance of stock or merchandise belonging to the enterprise solely for the purpose of storage or display. So it's different, yeah. When you maintain stock for the purchase, for the purpose of fulfilling orders, dengan maintain stock for the purpose of storage for display only. Right? There's a difference there. Processing by another enterprise, maintenance of its place of business solely for the purpose of purchasing goods or merchandise or for collecting information for the enterprise, maintenance of its place business solely for the purpose of advertising, for the supply of information, for scientific research or similar activities. So what happens is that in your exam, normally kita akan bagi you scenario, right? So what is the function of the agent lah, right? If the agent, normally kita nampak if you can conclude contract, then ada PE lah, right? Ada PE in Malaysia. That's simple lah, right? So they can tell you a very long story. At the end of the day, can conclude contract or not? Yeah. Conclude contract means that you can take orders and then you finalize the contract. Concluded lah, right? It's not that you only take orders and then you have to submit to US and then US approve, then only write approval. But if you can approve the contract, it means that you have the PE in Malaysia. Alright, Bond Limited is incorporated in the UK. It sells shoes manufactured by an associate company in Europe to distribute in Malaysia. Alright, UK, and Europe, and Malaysia. In order to promote business in Malaysia, it has set up a liaison office here staffed by a manager and 2 clerical staff. Sales contract have been concluded outside Malaysia. Apart from sales income, we also derive interest income from Malaysian distributor even they fail to pay on time the purchase price for shoes which they have ordered. advise Bond Limited whether it's liable to tax in Malaysia on its business income and interest income. Alright, the first and decisive issue to be determined is whether bond has PE. Assuming for the moment that if no PE here and that it had no salesman, agent, etc., concluding contract on its behalf with the distributor in Malaysia, it would be clear that the company could not be said to carry on business in Malaysia. However, it has set up a liaison office in Malaysia on the facts given the sales contract have not been concluded in Malaysia. On the basis of this analysis, therefore, bond would not be subject to income tax as it does not carry on any trade or business in Malaysia, merely trading with Malaysia. Business income from the sale of Malaysia distributor would not be taxed. The final issue is on the interest income derived by Bond Limited. The taxability is debatable as we do not know. Right, remember, interest income is based on derivation. If the income derived in Malaysia, so remember that the interest received by bond. So bond is the non-resident person. But the interest here, in order for the interest to be derived in Malaysia, not only the payer is Malaysian, but also the interest is on the borrowing. And how is actually bond used? Or not, the Malaysian company use the money, the borrowed money in Malaysia. Right? The income will only derive in Malaysia if the borrowed money used for business in Malaysia or on asset for the purpose of production of income in Malaysia. So dia panjang interest income. But based on this, right, there's no further information about the interest, right? How the borrowing of the money. Was it payable under separate bill of exchange drawn or on the distributor, or how is it accepted? Since the interest is an integral part of the trading profit in this regard, applying the facts of the matter, the interest should be excluded from tax because it has a source outside Malaysia. That is, it will be a source where the sales contract will concluded. So in other words, in this case, it looks long, alright, but the basis is that do you have the conclude of business in Malaysia? Right? In this case, the sales is not outside Malaysia and the interest is so no additional information provided. So we cannot simply say that, okay, you have to pay tax on the interest. Right? So in this case, it's regarded as no tax. Alright, lease rental on ships. Remember that lease rental on rental of movable properties. Under section 4BA, special income. Special income? Section 4BA, what is special income? Under withholding tax. Section 4BA panggil apa? Special class of income. Yeah. So special class of income, section 4BA ada A1, 2 and 3. Roman. 1 is on the installation. B is on the technical advice, supervisory, all that. Number 3 is on the rental of movable properties. So we're talking about lease of rental on ships. So ship rental, right? Rental on ships. So that one is under section 4BA. In lembaga hasil dalam negeri against Alam Maritim Malaysia Sdn Bhd, the company carries on business of vessel hire and management. Between 1994 to 2004, the company paid charter fee to non-resident company operates outside Malaysia for the supply of ships. So means now sekarang dia bayar rental pada non-resident person for the supply of ships. These non-resident company are mainly from Singapore. The payment despite within the ambit of section 4A3, no withholding tax was paid as the non-resident company do not have permanent establishment in Malaysia, therefore able to seek for relief under Article 4 of the Double Tax Agreement. So, the issue here is that there's a rental of ship, right, to a non-resident person, the Singapore company. So, under withholding tax, right, the law says that payment of, in this case, rental of ship to the Singapore non-resident person, you have to withhold tax. But now they did not withhold tax because why? They kata Singapore don't have permanent establishment in Malaysia. issue of withholding tax and permanent establishment are two different issues. Right? Permanent establishment is on the business income, whether you have business in Malaysia or not. Yes, in this case, Singapore don't have any permanent establishment in Malaysia. But the payment of the rental of the ship is subject to withholding tax. See? So sekarang dia tak withhold tax. Siapa yang tak withhold? Maritime Sedia Berhad. Because he is the payer. Make payment of Section 4A3 to a Singapore who is a non-resident person. So by right, that attract withholding tax. But now the company did not withhold tax. So they're non-compliance lah. Tapi the argument is that I did not withhold tax because the company is a non-PE. So there's two different things. Yeah. So let's look at the answer here. The income or profit of a Singapore enterprise shall not be taxable in Malaysia unless the enterprise carry on business in Malaysia. So that is the permanent establishment. Right? Through a PE situated in Malaysia, if the enterprise carry on business as aforesaid, tax may be imposed in Malaysia on the income or profit of the enterprise, but only on so much thereof as is derived by that PE in Malaysia. The company relied on the double tax agreement for relief of withholding tax. It is an accepted general principle of double tax convention that an enterprise of one state shall not be taxed in the other state unless it carries on business in that other state through a permanent establishment. Agree? Yes. Yeah. The Court of Appeal. Alright. So sekarang ni kalau tax you ada macam ni tau. The first level kalau disagreement will be apa nama dia? Dekat Commissioner of Tax dia panggil apa ya? Apa nama tax? Apa dia? Court dia? Kat bawah sekali. Nama court apa? Apa? Katalah you tak agree dengan apa-apa, you akan pergi first court dekat tax law. Bawa buku Malaysian Tax ke Advanced Tax? Siapa bawa Malaysian Tax? Tak ada? Tengok dekat belakang-belakang appeal semua tu. Apa? Court of Order atas tu. Federal Court ke bawah Malaysian Tax Court. Nama court dekat lembaga hasil tu. Court for Children. Ini dah court lain. National Legal System. Ni tax legal system. Ni kita nak tengok tax. Apa nama dia? Di sini. Dia kat belakang ada gambar. Dah ada chat tu. Di sini. Tak pandai pun. Ni SIT. Apa SIT? SIT pun tak dapat tangkap dia. Ni lah Special Commissioner bukan? Apa SIT? Cari SIT apa? Special Commissioner of Income Tax. Betul kan? Memang SIT tu. Tak, nama dia tu. Special Common Code. SIT tu. Is it special commissioner? Ya, SIT kan? Okay. So maknanya katalah sekarang ni what happen is that mula-mula whenever you have a disagreement on income tax, right, you akan pergi special commissioner of income tax. Right, special commissioner ni is actually is made up of technical expertise from the Inland Revenue Board. Alright, so dia akan decide whether your case tu is can pursue or not. They whether, katalah macam ni, Inland Revenue Board issue you additional assessment and you disagree with that, right? So you disagree with that, whatever happen, you have to pay the additional tax. You pay the additional tax, then only you boleh appeal to the special com. Special com akan tengok your case. So even though special com is under income tax, they are different from the one that assess you. So dia macam satu a small court lah under income tax, special commissioner. So they will look into, because they are this technical person, they will look into your case and decide whether they will agree to the additional tax, or they may say that, oh, you don't have to pay tax for that, right? So if they agree that you don't have to pay tax, then they have to come back to the zero lah. So they can dapat tax refund lah on the tax that you have paid, right? So what happen is that if special com kata, oh, you have to pay tax juga, right? You have to pay tax. So what happen now means that you kalah lah. When you kalah, when you didn't win, alright, you can go to higher level. So higher level now you go to your DG review, special com, then you go high court. High court dulu. You pergi high court and then you argue. Bila you argue, tengoklah high court agree whether they are in favour or against you punya case. Katalah you kalah lagi, then you go to your court of appeal. Alright, court of appeal here is the highest court. You takkan pergi federal court, I think, in under income tax. I tak nampak federal court. High court and then court of appeal. Right? Kalau kat Malaysia ada the federal court lagi satu, tapi kita tak pergi. Kalau income tax dia tak pergi federal court, dia pergi court of appeal je. So court of appeal akan, sometimes they will overrule the decision made by the previous court, right? But it depends some. But why company is willing to go fight for all this, alright? Because if they happen to win at any of these, alright, their cases akan nama panggil precedent case. So other company may refer to their case in order to get kind of deduction or whatever lah, alright? So that's why we normally refer to the cases under the law, alright, with regard to any issues that is encountered by companies. Yeah. So the court of appeal. So bila dia cakap court of appeal kat sini, I nak pergi sebab tu, I nampak court of appeal tu. So nak cerita maknanya company ni dia dah pergi SIT, dia kalah. Dia pergi lagi dekat court of apa tadi? High court kan? High court dia kalah juga. Now dia pergi tu court of appeal. Right? Bila mana means that when I say it kalah, right, means that special com kata you have to pay tax. Court of pergi ke high court kata you have to pay tax, and then court of appeal. So court of appeal concurred with the high court. Right? High court decision that in accordance with the avoidance double tax treaty entered between government of Malaysia and each of the government of the country in which the non-resident company operates, the income received by them are taxable as business income in the country where they actually reside or originate from. Betul lah. Maknanya because in this case they don't have the PE. As the provision of DTA tax precedence over the act, the company is therefore not obliged to make deduction of withholding tax in respect of the payments to the state non-resident company. Okay. Kat sini dia kata court of appeal Lepas tu nampak dia ada pergi federal court, which is not there. Right? Dia pergi federal court. Federal court is the highest court in Malaysia. Upon further appeal to the federal court, so company ni pergi matang loh, you know the cost of all these legal fees dia sanggup. Upon further appeal to the federal court acknowledged that the importance of DTA to avoid double taxation. However, opine that Article 4 of the double tax agreement must read together with the Article 2.1 exclude the application of income derived from the operation of ships or aircraft. That's why kita tengok double tax agreement very clearly, right? In the case of lease rental on ships or aircraft, the issue of no PE is irrelevant. Whether you PE ke tak, alright, the rental of ships, in this case under special classes of income, you kena withhold tax. And Section 4A3 applies to payment of charter fees to non-resident company. So federal court at the end cakap apa? You kena bayar. Right? You kena withhold tax. Right? so means that from all the way, alright, dia cakap pasal business income, memang company Singapore don't have to pay tax in Malaysia on the business income because there's no PE. But they have to pay tax on the rental of ships. Pay tax in the form of withholding tax. So it means that maritime kena hold tax on that payment of rental of ships to the Singapore company. So what happened now, all this while, payment of the rental of ship is not no withholding tax. So you dah bayar 100 gross, you know. 100% you bayar kat dia. So remember bila you did not withhold tax, what happened? You kena re-gross. And talking about how many years punya business, you tak pernah withhold tax, and now the amount has to be re-gross. That's why they willing to go until federal court. Kalau dia kalah, dia kena bayar withholding tax. And based on the re-gross amount, a lot. And you bayar ship kena sikit-sikit. Right? So sometimes you have to see jugalah why companies willing to go for the court punya ni, sebab otherwise they may have to pay a lot more. But some other company, for example, in the case of entertainment expenditure, right, company keep on going to court sebab nak dapat kan expenditure, entertainment expenditure is part of the business activities. Alright, how can you, for example, it depends on the type of business. Some companies, they need to entertain client, potential client, in order for them to get sales. Right? You're talking about, you're bukan talking about kedai runcit, you're talking about those jual expensive cars, right? Those watches, jewelries. You have to make contact, you have to entertain them first, get them trust them, they can buy, they can conclude sales. So this expenditure initially was not allowed 100%. But because so many years of fighting in the court, now the government said that okay, we allow 50% entertainment expenditure. Right? But if it's wholly for sales, then 100% is given. So worth it lah. So companies now enjoy, right, those deduction because of those companies that fight in the previous years. You see? So the journey, alright, of all this expenditure is not short lah. Alright, it's over the years punya history. Right, it's interesting. I suka case ni because to me is memang nampak the difference between your PE, the importance of PE, and then withholding tax. Right, you don't have PE, but if it's still subject to withholding tax, you still have to withhold tax. Right, maybe at the double tax agreement say the withholding tax will be at the lower tax rate, but still you have to pay. Right, so in this case, Maritime Sdn Bhd has to pay the government all the outstanding withholding tax due. Right, a lot. Right, withholding tax ni dah masuk kat situ. Regross payment, right, means that in this case you didn't pay, you didn't withhold tax, so whatever payment you need is deemed to be net, so you kena regross balik. Banyak lah, ya. Double tax agreement overrides income tax, yes. Ni kenapa tak terang Tax sparing incentive. Okay, apa benda when I say tax sparing, agak-agaknya apa ya? Tax sparing provision are embodied in several DTAs with which Malaysia had concluded is used to preserve the incentive which are provided in Malaysia to encourage foreign investment. So remember, you have all these incentive, pioneer status, ITA, alright, reinvestment allowance and allowance for special businesses, healthcare, whatever. A lot of incentive given. So means that bila incentive given means that the company may not pay tax. Right, maybe pay tax 30% of this SI only, or maybe 100% is exempted. So when the company does not pay tax in Malaysia because of the tax incentive, so what happens is that under normal circumstances, the tax credit is only available under a double tax agreement if tax has been actually suffered in the foreign country. So it means that, alright, look at this, yeah. You are talking about foreign enterprise having business in Malaysia. So because having business in Malaysia and then they qualify for tax incentive, so means now they tak bayar tax in Malaysia. Let's assume that exemption is 100%. So this company, foreign company, don't pay any tax in Malaysia because fall under tax incentive. So when talking about double tax agreement, alright, we only give exemption if you don't pay tax. If you pay tax in Malaysia, then only dapat exemption in the other country or even tax credit in the other country. But now, because you don't pay any tax in Malaysia, right, so you don't get any exemption lah. Sepatutnya lah. But in order to encourage people to have business in Malaysia, right, so that's why they come up with the tax sparing incentive. So what happens is that any tax that is foregone by the country which provides special tax incentive to foreign investor would be of little use if the foreign investor had to pay the full tax on the overseas exempt income in his home country. So investor ultimately would not enjoy the exemption granted by incentive country. So hence, tax sparing relief is provided to the foreign investor for the tax exempt income derived. The effect of the sparing relief is that the overseas tax foregone by the overseas state is treated by the home state as if such tax has been paid in the overseas state. With the tax sparing, foreign investor would benefit from the sacrifice of Malaysian tax foregone and not attributable to the treasury of foreign countries. So, assuming lah ni, remember tak masa kita buat example nirvana segala tu? The first example, we have a business. If you have business outside Malaysia, okay, you got the nirvana paradise in heaven. So all countries 20% tax rate. But because in this case, for example, we're talking about Malaysia, right? So Malaysia tax rate is 24%. You have foreign investor in Malaysia come to Malaysia having business and they have tax incentive 100%, right? So means that kalau you buat taxcom tu, do you have any tax paid in Malaysia? No, zero. Because why? Tax incentive. So for this the other part country, so bila you don't pay tax anything in Malaysia, so for them those agreement useless lah, because they don't get any tax exemption in the other country because zero. So what happens is that in order to keep encourage investor to come to Malaysia, so what we do is that we come up with this tax sparing incentive, assuming that you don't have to pay tax in Malaysia at all, but we still assume that for tax sparing purpose, as if you pay 24% tax in Malaysia. So the tax that you pay in Malaysia, assuming that you pay, so that is given as a tax deduction in the other country. So you still get a lower tax in your other country. So remember example hari tu, where you have tax haven, tax in Malaysia dengan tax in other country. So you have to compare whether it's exemption or deduction or tax credit. So the same apply, but you jangan tengok benda tu kat Malaysia, tengok di other country. So assuming that even though you don't pay anything here in Malaysia, we take that, alright, the other company pay 24% tax in Malaysia. So whatever tax paid in Malaysia is given as a tax exemption or given as a tax deduction in the other country. Nampak tak? So it's good for the company lah. You don't have actually pay tax, but you dapat tax deduction in your country. Right? So why? Because we want to keep, okay, come to Malaysia lah. Malaysia give you tax sparing. Alright? You don't have to pay tax in Malaysia, and in your country also you dapat tax deduction as if you pay tax in Malaysia. So it's not easy to attract FDI. Yeah? So that's why government use tax. That's why tax is used as a fiscal policy lah. Alright? In order to generate more income to the country. Okay, so that is tax sparing. So kalau dengar tax sparing tu apa, dah tahulah kan? Alright, Farm Cow Limited, example tax resident UK receive from Malaysian tax subsidy dividend of 40,000 pound in financial year end. Dividend declared from tax exempt income, alright, which are currently enjoying pioneer status. So means that for this company, bila you dapat 40,000 tu from exempt account, so the dividend is exempt dividend. So they don't have to pay tax in Malaysia at all, right? But in the UK, right, dividend income is still assessed at 40,000 pound, and then corporate tax in UK is 19%, but then you have to look at the double tax relief, whichever is lower, right? So double tax relief, Malaysian tax income is on the 24%, so 9,006 is given as a relief. So in this case, even though in UK you should pay tax on the 40,000 pound, 7,600, but we take that, even though you don't pay actually, yeah, you don't pay dividend in Malaysia put on the dividend. Why? Why do you pay tax on the dividend in Malaysia? Why? Farm kau ni dia terima 40,000 tau, dividend from Malaysia, but dia tak bayar tax. They don't pay tax on the dividend because the dividend is paid out of exempt dividend account. So the dividend is exempt dividend. So company don't have to pay tax. So dia dapat the whole 40,000. But now dia bawa duit 40,000 balik to UK. So in UK, that 40,000 should be taxed at 19% tax rate. But you don't have anything in Malaysia, you don't pay tax. Sepatutnya, alright, the deduction here, you only get deduction if you pay tax in Malaysia. But in this case, you don't pay tax. But because of the tax sparing incentive, it's deemed that you pay tax at 24%. So because of that, alright, sepatutnya you have to pay 7,600,000 pound to UK. But because of the tax sparing incentive, ada pay tax of 24%. So 7,006 compared with 9,006, so you don't have to pay anything. So not only you don't have to pay tax in Malaysia, but on the same income you don't have to pay in UK. By right, you kena bayar UK 7,600. But because the tax sparing incentive, you don't have to pay. Alright, it's deemed that you pay tax in Malaysia. And then we also have exemption of employment income. This one actually covered when you do your employment income under exemption. Right, if employment income, if you have an expatriate, alright, foreign expatriate working in Malaysia, and employment income is derived, alright, you may get exemption for the following. Under para 21-22, it says that if the period does not exceed 60 days. So if you have a foreign expatriate working in Malaysia for a period for less than 60 days, does not exceed. Does not exceed, mana 60 days fall into the category. So this 60 days could be one period. Kata ada kerja in Malaysia for 60 days only, working ya, bukan in Malaysia. You can be in Malaysia for 90 days, but your only working period is only 60 days or less. Those income during this period, the employment income is exempted. Right? So the 60 days could be one period, or it could be a multiple period during the year, or it could be a combination of 2 years, right? Total not more than 90 days. Not more than 60 days. So that's the first exemption. The second one is that okay, this one yang 30 days lah, 60 days ya, A plus B. It could be also at towards the end where the period that covers 2 years but still within 60 days. You can claim exemption also. Then you also have, in order for you to claim for the exemption, you must be a non-resident person, exercise employment, and the period does not exceed 60 days. So you must make sure that non-resident kan. So the employment must be 60 days or less, but you must not be a resident person. So you must make sure that you don't fulfill the 71 ABCD. Yeah. Director is not entitled for the exemption. So if you are a foreigner but you are a director in Malaysia of the company, for example, so director you receive income, director's fees from the company, but you only in Malaysia for less than 60 days. You are not entitled still because director's appointment is for the whole year, right? Even though you are not in Malaysia, but your employment will be taxed in Malaysia. Double tax relief, okay, this one, you proceed at bilateral and unilateral. Alright, so what's the difference between bilateral and unilateral? Look at this, the bilateral, right, Malaysian tax payable times by statutory income, which is the foreign source income over total income. Remember just now, if you know already what is your foreign income times by 24%. You compare that with your foreign tax payable on the foreign income. Remember last time, so you kata dah your foreign income. Hari tu berapa? Example ini foreign income. Let's say lah 100,000. Right? So what is your tax, Malaysian tax on the foreign income? It has to be at 24%. So Malaysian tax is 24,000. On the same foreign income, you pay pay tax 20,000. Alright, foreign tax on the same income. You're looking at that. So when you talk about bilateral, you're comparing this whichever is lower. So you're going to give deduction or credit on that 20,000. Right? So whatever your tax liability, you're given a deduction of 20,000. That is a bilateral. It means that you have agreement between your country and the other country. But if there is no agreement between, alright, so you're going to use unilateral. So the difference is that when you talk about unilateral, what is unilateral? Unilateral, the difference is that foreign income, you still use compare your 20,000 foreign income dengan, alright, foreign income, this time you still use 24,000, right? But the difference is that your foreign income times by half. Why? Because there's no agreement between the country, so the credit given is whichever is lower. So you still compare your Malaysian tax on the foreign income, which is 24%, right? Foreign income, Malaysian tax payable is 24,000, but the foreign tax that you pay is 20,000, but you have to times by half. So bila 20,000 times by half, it's only 10,000. And the law says that whichever is lower. So kalau you have bilateral, the deduction given is 20,000. But in unilateral, you only get deduction of 10,000. So it means that the deduction is smaller. So it means that you have to pay more tax. Why? Because there's no double tax agreement between Malaysia and the other countries. So that's one of the reasons why when you want to invest overseas, you have to see Malaysia ada a DTA or not. Right? Because otherwise your tax exposure is higher. So that's a bilateral and unilateral. The foreign income here makes the difference. Right? The deduction given. Because whichever is lower, so of course the 150% is lower. Most likely. Right? So it means that the deduction given is also lower. Okay. Banyaklah cakap hari ni. Right, this is an example of double tax agreement with Singapore and the new agreement. Look at, previously it was old agreement 50% now become 10%. Dulu 10% now become 8% and 10% becomes 5%. So it's good lah, right? Effective from 2007. Right, we have one question, alright, previously because kita tengok profession paper, dia pernah bagi apa tau? The question on double tax agreement, they give you the double tax agreement itself, the extract of the double tax agreement. Alright, so you have to, in your exam, you have to refer to the extract of double tax agreement in order for you to answer the question. Because your answer is actually based on the double tax agreement. Right? Kita pernah bagi final exam macam tu. Tahu ni tak? Alright, global tax harmonization. Right, in compliance to the OECD effort on global tax harmonization, the government has legislated the following: Income Tax Convention on Mutual Admin Assistance in Tax Matter, Order 2016, and Income Tax on Automatic Exchange of Financial Account Information. Right, so benda ni dah regulated. It means that, right, previously there is a law saying that, for example, if you have money keep in, mana you simpan money? Kalau buat hedging semua ni, Swedish, dia simpan duit kan? Swiss bank kan? Previously, Swiss bank kata whoever put their money in their country, information will not be released, right? But now because of this convention for tax harmonization, global tax harmonization, right, whenever tax authority requests for information on the depositors, bank has to give the information. So that's why sekarang ni when you open up a bank account, everything, you have a lot of signage, right? You have to sign a lot because you must agree that if, for example, even though you do have the personal data, PDA, apa dah? Personal data agreement, is it? Right? That means that anyone cannot release the information. Even the bank cannot release it. But if the one who requested the information is the tax authority, right, they have to release the information. Right? So that's why sekarang ni unlikely lah nak cakap you simpan duit dekat Swiss bank ke apa, right? Information is available to the government. Yeah. Yes, we still have I tak ada cover kat sini tax haven, right? But if you look, cuba you Google tax haven, look at which countries that actually now still fall under the category of tax haven. So when I say tax haven, it means that country that provides lower tax rate, right, to their investors, right? So normally it's small countries. I think that Papua New Guinea is also part of that. Yeah. Why they give a lower tax rate? Because they want to invite people to put money into their country, right, or to invest in their country. Because normally those tax haven country ni is small countries that depends on foreign investment. So that's why in order to attract companies to have business in their country, they offer lower tax. Yeah. Not only lower tax, I mean they make business easy, right? So all these things is things that will encourage people to invest in their country, right? Okay, so that covers topic on double tax agreement, alright, and then world scope done, withholding tax done. So next class will be on RPGT, real property gains tax. Alright, your final exam that carries about 15 marks. Nanti. 8, 20 lebih. 25. Right? This one cover topik berapa orang kali ni? Withholding tax dengan double tax